What was the first syndication like, after this single family homes?
It was a master lease with option to purchase in Ohio, and it didn't go according to plan. I made a lot of the mistakes that you could find someone make in a deal. I tried to do everything myself, raise the money, asset manage, find the deal, and I realized that I just wasn't wasn't uh, wasn't experienced enough to do that because I initially was treating it like single family homes that I would just buy and then the property manager would manage, and it was completely hands off. This was not. This was hands on, even though it was 90 high 90s occupancy property.
Most people think that wealth and real estates come from finding the right deal. But the truth is, deals do not build wealth. Decisions do, discipline does, and more than anything, the ability to stay in the game long enough to compound. Because the difference between someone who does one deal and someone who builds billions is not just access, it's how they think, how they operate, and how they build trust over time. I'm your host, Loomba, and today we are going to break that down because today's guest is someone who hasn't just participated in the multifamily space, but he played a defined role in how this space has evolved forever, I guess that's how I'm going to say. So, Joe Fairless, he's the guest today. He's the co founder and managing partner of Ashcroft Capital. With over 2.7 billion in asset under management, he's also the creator of longest running daily real estate podcast, the Real Estate Investing Advice Best Ever Show. In many ways, Joe has become one of the foundational voices in the industry, someone I would generally call a godfather of modern multifamily investing. Joe, welcome to the Wealth Vibe Show. I'm super excited to have you with me today.
Well, I'm excited as well and looking forward to the conversation.
Thanks. And today our topic is from first deal to 2.7 billion, how real estate wealth is built in multifamily. So I wanted to start from the very beginning, from the very get-go. When you were stepping into your first deal, what felt uncertain at that moment and what gave you the conviction to move forward anyways?
My first deal was a home in Duncanville for 70, it was purchased for $76,000. And I was living in New York City. The house is in Duncanville, which is south of Dallas, for those who not familiar with the DFW area. There was uncertainty because the year was 2009
Mhm.
and the crash had happened, but the recovery had not. And I was renting an apartment in New York City, and the lenders had a lot of questions about, well, why are you buying a home in another state, but you don't own your primary residence? I had to get them comfortable with that. And then, yeah, I was in New York City, even though I was from Texas. I'm from Texas. I was living in New York City, so buying a house in Dallas, south of Dallas, was also had a degree of uncertainty. But I was committed to getting it done because I knew that uh, real estate was the path for me. I didn't know, to what degree it would grow, but I knew with that I wanted to buy that single family house. So I got certain through finding the right people who could help me. My sister helped me out. She was a real estate agent in the Dallas Fort Worth area. She connected me with a property manager and some other people who helped me do due diligence on the property.
So first deal that's as well out of state, and then you come from advertising background, right? Not in real estate. So take us through that journey. How did that transition happen? What was the mindset shift there?
I would say, yeah, the mindset shift from so my major is advertising. I went to Texas Tech, major advertising. My minor was in English. And I moved straight from Lubbock, Texas to New York City right after I graduated. I think I graduated the last week of May, and my first day on the job was June 1st in New York City. So I went from Lubbock, Texas to New York City, quite a transition.
Mhm.
I I what I learned from that experience is the importance of just going after your goal regardless of the the challenging circumstances. My journey is not typical, going from Lubbock, Texas to New York City right out of college. I lived in East Flatbush, Brooklyn for a year, and then I lived in East Village for 9 years, approximately 9 years. And so it was it was a big transition from just Texas to New York City. And then I was making $30,000 in New York City. It's like $750 every 2 weeks that I receive on my paycheck. And one 750 went to my rent, and the other 750 went to food,
Mhm.
went to student loans, went to any other expenses, whatever, the Metro card to train, to go on the subway and whatever other expenses there were. So and I didn't know anyone in New York City.
Mhm.
It's not like I went up there with a friend. I went up there by myself. And I was like, okay, the game time. What are we doing here? How do we make this happen? So I worked on Madison Avenue right out of the gate in New York City, and then I climbed the corporate ladder in advertising relatively quickly. I became
Mhm.
the youngest vice president of a New York City advertising agency on Wall Street. It was a different agency than I started. And my goal was to make $100,000 before I was 30. I ended up
Mhm.
achieving that. I don't remember the exact age, but 28 or so years old. And I realized that I'm not fulfilled by what I was doing. Now, you can find fulfillment in advertising and marketing, and people do, but I was not fulfilled by it and anymore. So then I started studying real estate because I'd been investing in real estate on the side, like that single family house that I mentioned. I ended up buying 4 single family homes. And my coworkers were kept asking me, well, how are you doing this? You're working crazy hours, 9 a.m. to 9 p.m. Monday through Friday, just like we are. How are you buying real estate? And I told them, and eventually I started teaching a class on the weekends on how to do it. So it was through a platform. I don't know if the platform's still around, called Skillshare, and that there was in-person classes. Later, they changed to just virtual classes, but there were in-person classes initially. So I would host in-person classes. First 2 people, one person would show up, and then eventually I got a room full of 10 to 12 people who showed up. And that was maybe 20 at the most would show up for one of these classes. I would teach people how I was investing in these single family homes living in New York City, but the homes were in Texas, in Dallas, Fort Worth, where I was from. Eventually, I had my former boss at the time. He attended the class and he said, this is interesting, but if you ever do something larger, let me know because I don't want to do this. And that's when I realized I had a customer before I had a product. I had someone who's interested in investing with me, but I needed to learn how to invest in larger things. So I started studying that, and larger things meaning apartment communities.
You started out of state from the very get-go, and I understand that you learned maybe about real estate investing because your sister was realtor. what was that first introduction to real estate? That's what I wanted to know. Because a lot of people, they do not know. Like I learned by default. Because when we moved into the second home, we rented the first one. So all of a sudden, light bulb went on. Like, oh my God, $500 every month. That was a lot of money 20 years back, 25 years back. So that's how we started with the single family. But what was your light bulb moment?
I think I remember my light bulb moment actually. You know, I remember, so it happened over the course of 6 months or 12 months. But I'll tell you what happened. I was walking by, um, in New York City, I was walking by Bank of America, and there was a poster in the window, and it said, you know, 3 point, well, whatever, I don't remember the exact percentage, but call it 3.2% on a CD, lock up your money for 6 months or 12 months. And I
Hmm.
was looking at what I was making on my savings account, and I was like, well, that's a lot more. So I put money into it, and people can reverse engineer the math. I don't remember what it was. I think it was $1,000. I think I put my $1,000 into it, and I remember getting $16 back after they had held my money hostage for a long period of time from me. And then I got taxed on that $16. And then I thought, okay, there's got to be a better way. And so that's when I got the check for $16, and then when I found out that I was getting taxed on that, I remember that vividly. And then I said, there's got to be a better way. So I read Investing for Dummies, which talks about, real estate, stocks, bonds, and investing in companies. And then I went to Rich Dad Poor Dad seminars, at least one, I think two. And I went to other seminars and I read a bunch of books. And so
Hmm.
that's where I learned that was the aha moment. And then I just started studying and learning as much as I could.
I think you were seeing things, or you had the mindset how to work the things because your BFA moment and your former boss asking you he wanted to understand bigger deals, right? So you didn't just bypass those moments like, okay, I have to do something about it, right? So tell us, what was the first syndication like, after this single family homes?
It was a master lease with option to purchase in Ohio, and it didn't go according to plan. I made a lot of the mistakes that you could find someone make in a deal. I tried to do everything myself, raise the money, asset manage, find the deal. And I realized that I just wasn't wasn't uh, wasn't experienced enough to do that because I initially was treating it like single family homes that I would just buy and then the property manager would manage, and it was completely hands off. This was not. This was hands on, even though it was 90 high 90s occupancy property. uh, there was a lot to work on once we closed on the deal. Rent collection, getting higher quality residents in, a lot of maintenance requests, and just a lot of CapEx needs that I didn't budget for, and learned from that. And from that, and I ended up moving from New York City into the model unit at this
Mhm.
property. It was 168 units. So I moved into the model unit, and then I would pack up all my stuff in the morning, and then I'd walk to the leasing office, which is 100, 50, 75 yards away, and then I would go meet with prospective residents, and I go show them the model unit I was just sleeping in, 15 minutes prior. And sometimes I'd accidentally leave my toothbrush out or something, and I'd quickly like put it into the drawer when we get there. And I was very hands-on. I would go to Home Depot and get pothole filler and put it in the trunk of my Corolla and then drive it over to the property and then fill potholes in the evening. I'd go. I help with get the paint the walls and get what they called kills, put kills on the walls to get the cigarette smoke out of the walls, all sorts of things. But I all those efforts resulted in it's still not performing how I wanted, or how I anticipated. And so I realized that in some challenges in life, there are there are um, there are challenges that we can't overcome despite our best effort, because of for either the challenge is too great, or some other reason we don't have the right skill sets, we don't have the right relationships at that time. So that's something I learned, and what I did after that is I found a business partner who had the complementary skill sets that I did not have at the time. So, asset management and acquisitions, primarily. And then we formed Ashcroft, and we bought our first property in Houston, Texas. And we have a really good partnership between us, and off we went from there.
And when we look at you where you are today, over 2.7 billions in asset, that level of scale, it does not happen by accident. So I wanted to learn about that trajectory, the company's form. So what were the key inflection points that allow you to grow from your early deals in this company when you formed the partnership and getting to at this level or operating at this level?
I'd say relationships,
Mhm.
the strong and stronger relationship with the the my business partner Frank. I'd say early on our relationship with a property management company that also signed on the loan when we didn't have the net worth, liquidity, or experience to get approved for the early loans. Then relationships with uh, as we were able to stand on our own 2 feet to get the loans ourselves, the relationship to be able to eventually build our own property management company. And I wasn't involved with that. I was just more or less someone on the sideline watching it, but my business partner built that out. And just being able to have our own property management company has been important, because now we're vertically integrated, and we have we have our own teams at the property versus a third party team at the property, which it makes a difference whenever you're talking about people overseeing precious assets that you're responsible for. So those are the things that come to mind.
Partnering with a property management company to sign on your loan, which is kind of amazing. I would love to learn that. How did you build that relationship? But also, let's touch on capital too, because there's not just the loan part, but since you're syndicating, so you're raising capital too. So, when you were raising capital in your early deals, when you started that, so what difference do you see between now and then? Because now I think capital is flowing towards you, whether it's a debt or an equity, because you became a magnet to it. But I think there was a lot done to get here.
Yeah. Yeah, I mean, I'd say everything compounds on each other, or on itself. So like you do a good deal, and then that helps raise money for other deals. If you lose money on a deal, which we have lost money on deals, and uh, that is obviously a negative towards what you're seeking to create. So I think it's a matter of investors knowing that you're making the best, most informed decisions that you can at the time, and then when challenges do come up, navigating them as best you can, and continuing to have the communications with the investors, letting them know what's going on. So I think the communication is important and necessary, because I'm on a lot of deals as an LP, over 100 deals as an LP across I think over 50 operators.
Mhm.
So I've seen, varying degrees of communication from operators, and some really good who communicate every month or on a regular cadence, with the right update, and then some who just attach a PDF that has what the occupancy and rents are, and they send that every quarter or so. So it's just being being present and communicating through good times and challenging times is what's most important to me. Uh, and as an investor, as an LP, but then also as a GP. And then that helps, as you know have other opportunities, that helps investors be more comfortable and understanding with investing with you, because they know, hey, through thick and thin, this is what I can expect from Ashcroft Capital or Joe Fairless or whomever else follows that approach.
So let me ask you this question. So from your experience, you actually brought up a really good point about the communication. Some communicate too little, some maybe too much, or some maybe kind of in the middle. And since you've been in 100 deals yourself as an LP and you're getting a lot of communication, so what would you say, being at this point with all the experience that you have, which is the best strategy, when you're communicating with the investors?
Yeah, and we're constantly evolving to attempt to continue to get better and better at investor communications. And where we're at now is we do a monthly update, and we're going to do a quarterly detailed report.
Mhm.
So you can keep investors updated on high level KPIs and updates each month, and then every quarter they can have the detailed financials and your reporting, uh, should they want to review it. So that's what I've found to be best. And I'm on deals actually that I haven't received an update in maybe uh 12 months. And so
Wow.
I have to follow up with them. Yeah, there's one development deal that I'm thinking of, that I invested with someone, and I was supposed to be started 2-3 years ago. It hasn't been started, and yeah, I just haven't, unless I follow up with this person, I don't hear an update. So it's but uh, what's important is to look at what's the best case, ideal standard. And ideal standard is, I think, monthly updates with a quarterly, more robust financial package.
I like that. And I do have one of those deals too, the development deals myself, that I don't hear much about either. So what could be the reason that people just go hide, you know, behind the
Uh,
curtains when
in
like,
this case, I think it's twofold. One, the person that I invested with is no longer doing commercial real estate.
Mhm.
So this person has moved on to other career choices. And because of that, it's a previous career of theirs where I invested with them. And they were a co-GP on the deal. So I invested with them, and then they put the money into the deal where the people who are really running it are actually in charge, not this person. So that's one. And then two, well, it's way behind schedule. So there's not a lot of good news to report. So that's probably another, and I'm speculating, but I would speculate that's the second reason why this person in the deal doesn't send out regular updates.
Mm. Yeah, you're right. I know. I think sometimes the other third scenario is, sometimes people think that, oh, something is not 100% what I was projecting early on. So let me fix that, bring the things back on track before I start reporting to investors. And I don't think investors like that because they wanted to know everything, the good, the bad, the ugly, maybe 10
Yeah.
feet away. So
Yeah.
that's what I learned from my experience as well. So let's talk about today's market. What do you think about today's market? It's a lot of noise, a lot of uncertainty. So what is the investor sentiment at this time? Where do they get the confidence to invest in any deals or your deals?
Well, I'd say where the market's at from my vantage point, uh, is that Class A deals are compressing. The cap rates are compressing in Class A deals. Class B deals are holding steady. Cap rates are not expanding, maybe slightly compressing, not like Class A though. And Class C and D deals, I think you've still got a little bit of time before you're going to get um, some stabilization there. And by and large, and again, like this all depends on the market, it depends on the sub-market, it depends on the neighborhood and the street within the submarket. So, anytime you talk about general statements like this, there's more exceptions than there are not. But we have to talk generally because that's just how we have to look at trends. I'd say that we're past the stage of when is a supply wave going to stop?
Mm-hmm.
It stopped. It has stopped. The data shows that the supply wave that hit us has stopped. We're back to levels that we were at 4 5 years ago. Q1 was. So we're finally in the stabilization stage. And in the stabilization stage, what most people don't take into account is that, okay, great, the supply stopped, so now we can increase rents. Nope, that's not right. The supply wave stopped, so now we likely need to cycle through one term with tenants, so 12 months before we can start increasing rents.
Mm-hmm.
So we're not going to see, most likely, we're not going to see significant or maybe any rent growth this year, but next year, because we are now officially in the stabilization stage, and that takes approximately 12 months, because you've got people who came in, okay, we're stabilized, but you still got concessions from when they signed their lease. So you've got to cycle that out. Once you cycle that out, then you've got the ability to have rent increases for properties, assuming that you're adding value to the residents along the way, and it's a good value to them, because ultimately it's got to be a good value to them in order for them to pay it.
Hmm. So from the deal perspective, you think a lot of deals are hitting the market right now? What is the overall picture that you're seeing? Because you think, is it maybe the rock bottom, or we gonna see some more downturn before we kind of, start seeing some upward trend?
Well, I personally think the ship sailed on Class A. I mean, the bottom was a year ago, I think.
Hmm. Hmm.
Class B, um, maybe now. Maybe now's the bottom, maybe a little bit before, maybe a little bit after our conversation. But I think we're already seeing competitive pricing for Class B boy deals.
Hmm.
Class C, Class D, I don't think we've seen the bottom yet. And that's because people, the peak was approximately 2021 or 2022. So let's just say it was 2022. Well, most loans are 5 years, so add 2022 plus 5, 2027. So
Okay.
2027 is when you'll see some more deals that need to do something. Well, that being said, a decent percentage of those deals have already figured out something, whether it's, they did a capital call and extended a loan, whether they refinanced, whether they, uh, you know, yeah, I don't know what, I guess those are a couple of the main options, refinance or extend the loan. Um, so it might not all be 2027. It could be 2028, 2029 when those deals are coming. So I don't think there's going to be a day on the calendar or even a year on the calendar where you can say this is when it's going to all go down because of the different options people have already used. But I do think for Class C and D deals, it's going to be starting next late this year, and then for the next 18 months, you're gonna see a steady stream of deals being sold much lower than what the owners want for Class C and D deals.
Yeah, those are the heavy lift ones. And we do already see that in happening right now as well, right? A lot of distressed properties. But I think if you think about like, a little bit, I would say the macro perspective. So wanted to hear from you, from your experience, you have tons of experience, how you are seeing the market, what exactly is happening in the multifamily, and then what are all these newer investors might be missing on because they might not have the same set of glasses or lens to look at the market at the macro level or maybe at the micro level the way you're looking at right now.
Yeah, I mean, uh, in addition to what I said about the A, B, C, and D deals, I'd say, we're currently looking at opportunities to buy from lenders directly. And we've already bought one deal from a lender directly, and we got preferential financing on that deal. So um, there's going to be opportunities, and as a passive investor, I look for, I want to understand first off, and most importantly, the operator and what they've gone through, track record, how they've navigated challenges. But then also I want to understand the story behind how they got the deal and what type of distress is involved with the deal because there should be some form of distress, unless it's a Class A deal. If it's a
Mhm.
B, C, or D deal, there should be some form of distress for why they're selling right now. Because again, Class A deals, I think you can sell. We bought a deal in August of 2024, a Class A deal built in 2021, and we bought it at a cap rate of 5.5. And cap rates in that market now are 4.9, 4.8. So we've already
Mhm.
seen compression there.
Mhm.
But for other deals of Class B, C, and D, you're not seeing that.
You've been through multiple cycles, right? You've been doing this since 2009, you said. And I wanted to know what has helped you stay grounded and continue executing when market shifts, because you have seen multiple cycles, right? 2008, now this, and maybe before that as well.
Focus on what you can control. Can't
I
can't
love.
yeah, can't change what you did or didn't do in the past. You can focus and you can influence the items under your control. So that's the mindset that we have as a company.
So, looking at your full journey, what are some of the non-negotiables, the principles you believe anyone must follow if they want to build real long-term wealth in this space,
Measure your life based on the quality of your relationships. That's a big one for me. Another is the secret to living is giving. That is a Tony Robbins quote, and there's a couple other like that. Help enough people get what they want, you'll get what you want, and service to many leads to greatness. So those three quotes kind of mean the same thing in my mind, and that's just to give, to focus on others and to give. So those are some things that guide me.
Wow, I love those, all of them. So let me ask you one last question before we move into the rapid fire round. If somebody's looking to get started at this time, maybe LP or GP, we know people are sitting on the sidelines and they have the money, they have the resources, but they're looking for the right time because some people they think it's not rock bottom yet. I'm gonna find the best deal. So, what is your advice? You think they'll find something, or they're just gonna bypass them and they will be sitting on the sidelines, maybe?
Well, I can tell by the way you're asking the question. I think we think similarly. I think you're not gonna find the perfect deal, but it does need to be underwritten conservatively. I would suggest learning more by listening to podcasts like this. We have a newsletter that is very educational and engaging and entertaining. You just go to bestevercre.com. We have over 46,000 people who subscribe, 20% open rate. So it's a good newsletter. So that's another resource for you. Go to conferences and be around others who are executing at the level you want to execute on. And then by putting yourself in proximity of them, that will either level you up, or then you'll realize this isn't for me, and then you'll go pursue something else that is.
I like that. So I lied. I'm gonna ask you one more question that came to my mind. Best ever. So this is like best ever I ever heard. And a best ever, right? So how did you come up with this positioning for yourself, which is like I think the great way to position yourself. And everything is best ever for you. Your book, your podcast, or whatever way you're positioning yourself, you always use best ever. How did you come up with that? And how did you think that is going to position you like right above everybody else?
You know, I wanted something that would stand out, but it's ironic because if for people who know me, they know I'm not a boisterous, thump my chest kind of person. I am I'm humble and I want to be helpful. So it's there is some major irony involved with the name. Um, but it was something where it was available on GoDaddy. And also I saw, I wanted to make the podcast around something that I wanted to hear what is someone's best real estate investing advice ever? Like what's their best advice? And I thought that would be interesting. Like I've interviewed Barbara Corcoran from Shark Tank. I've interviewed Emmett Smith, who also has a development company now after football. I've interviewed thousands of other real estate investors. And I wanted to get to the core of what is their best real estate investing advice ever. And so because of that, I named it, best ever.
So, what is your best ever advice for real estate investing? Let me ask you that today.
I'd say focus meaning action. So whatever we focus on and then whatever meaning we associate to that dictates our action. So um, nothing in life has meaning until we decide to give it meaning. Everyone who's listening to this can have their own unique interpretation of how this interview went, what information they got from it. Even though it's the same information, everyone will have, based on what they've experienced in life up until this point, their own interpretation of what we just talked about. And through that interpretation, everyone will have different action that they take, whether it's no action or a lot of action or certain action, specific action. And that is the power of us as human beings. With whatever we focus on and whatever meaning we associate to it directly correlates or ties into the action that we take. So I would be mindful of that because people can hear the same thing but interpret it different ways and then take varying degrees and directions of different action or no action. And once I understood and embraced that, that helped me give things empowering meanings, even challenges. And when I give challenges empowering meanings, because life is supposed to be challenging, it makes us stronger. When I have that mindset, then that gives me different meaning and then different action that I take versus the woe is me. Oh man, that sucks. That happened. Poor me. I don't think that way.
I love your mindset, Joe. I have to tell you that because you're right about that. Everybody's interpretation is different because everybody comes with their own set of experiences and they see everything through their experiences, nothing beyond that.
Yep.
And I challenge that if somebody tells me they can see something beyond their experiences. No, whatever their experience is, good, bad, small, big, that's how they're going to look at everything. And the other quote that you said, I love that where you said, where attention goes, energy flows, and things happen. So let's move on to a rapid fire round. And now you're going to answer it in one word or one sentence only, spontaneous, no overthinking. So the first one is, what was your very first job?
Work construction, pouring asphalt and concrete.
What is one daily habit you never skip?
I drink a liter of water with a scoop of wheatgrass every morning.
Ooh, nice. What is one book that influenced your thinking the most?
Crucial conversations.
I like that. If you could go back and change one decision in your journey, what would that be?
Wouldn't.
I like that because that's why you're here, right? What is your wealth vibe?
Well, oh, my why? I mean, I don't have a wealth why. I just I want the world to be better as a result of what I've done to help. That's it.
Such a incredible conversation. And if people wanted to reach out to you, connect with you, wanted to learn more about you, how can they do that?
If you're looking to passively invest, you can go to ashcroftcapital.com. If you're looking to, just learn more as a general partner, then go to bestevercre.com and join that newsletter. And you'll get a lot of value. It's a free newsletter. You'll get a lot of value. It comes out every week.
Thank you so much again. And to the listeners, if I had to leave you guys with one takeaway, it is that wealth is not built by chasing the next opportunity. It's built by becoming the kind of person who can recognize, execute, and stay committed, just like our Joe Fairless, the best ever. So stay inspired, stay intentional, and keep building your wealth vibe.
Thanks for tuning in to the Wealth Vibe Show. If you enjoyed the episode, be sure to subscribe and leave us a 5-star review. And don't forget your free gift. Download the Busy Professional's Guide to Real Estate Investing at loombainvest.com. See you next time with another amazing guest and another powerful conversation.